If Bitcoin's making a lower high, I'll buy a put spread. So I buy puts, but then I hedge. I hedge with puts, and then I hedge the hedge by selling puts. If Bitcoin is making a lower high, I just buy outright puts. Sometimes I even cash out. In this case, I think I would cash out of the market simply because there's been no upside. But we can discuss that in a minute. On the upside, when it crosses a high VTL, I just buy calls. I buy some Bitcoin, then I buy calls. And normally what I do is I also try to buy on pullbacks. So what's happening here, let me draw these again. So it's this one. This is VTL. We're going to make this. Actually, you know what? Let's leave it orange. And here's the 80-day cycle top. So what I do is I'll buy calls here. But since this is a bullish signal, I also sell some of those calls and buy cash Bitcoin during any pullbacks. So I bought here in early October, and I believe I bought again here. And this mini correction when it tested the high and then it pulled back, I bought a little bit more. And I only had a couple of Bitcoin left to buy by the time we got to November. And those calls just went straight into the money, straight in the money after the election, after election night. So that's how I do it. Whereas when I hedge with puts, it matters whether the market is making a lower high or a higher high ahead of that breakdown of the VTL. That matters a lot. However, there's some nuance here that I do want to discuss in a minute, because I think this time, even though it's making a higher high, I'm just going to go to cash because there's been no upside. All right, so Perry's asking, do you ever keep buying more options, calls, or puts, respectively, to add to your pre-breakout position as the price goes against it for a bit? Yeah, that's kind of what I do, Perry. I don't buy more calls. This is what I think if I get this correct is, do I keep buying calls as the market corrects? No, typically what I'll do is I'll sell those calls because they still have some premium left in them. During this late September breakout, for example, I was buying November calls. So notice that, and this is quite typical, prices cross above the VTL here in late September, but then they go for a correction. Which I believe it was high by then. By this time, I have the forecasting model. I believe there was a forecast for a high in late September. So I have these conflicting signals. What I do is I hedge. That's why I call it a hedge. Because if you think about it, that's what it is. In late September, I'm expecting a pullback, but I also have a crossing, a breakout on the high VTL. So what do? I buy a little bit of Bitcoin, but I buy calls in case I'm wrong and I don't get a correction. If I get a correction, if I do get a correction, which is what I'm expecting here in early October 2024, I'm expecting a correction. So what I do is, as the price pulls back, I sell some of these calls. I don't need them anymore. And I buy Bitcoin. So I'll sell 1 Bitcoin worth of calls and I'll buy 1 Bitcoin because I don't need to hedge the upside. I'm already right. The market is correcting. Now, since I don't know what it's, because you never know. I mean, trading is the art of navigating the unknown. You just never know what's going to happen. Maybe it breaks the VTL and then it goes to 40K. You never know what's going to happen. So I'm always careful. I know that as long as I have these calls, the worst case scenario is Bitcoin breaks out against all odds ahead of time, because I thought it would break out in November simply because it's this major catalyst, the US election, pro-crypto candidate versus a no crypto candidate. And also November 5 was one of the highest readings for low on the forecasting model. So I thought this thing is not really going to move before November. I don't want to have too much exposure unless I can get good prices. So to me, it was buy the dip time. Every time Bitcoin dipped, I would buy more and sell calls. However, when election night came, I still had some calls. I don't remember this. I think the strike was 72. I don't think I bought the 70s, even though 68 was the last 80-day cycle high. In late September, Bitcoin was trading for 65, 66. The 70 calls are too rich, in my view, at this time. I was like, these are too expensive. I'm just going to buy the 72 calls because it doesn't matter. These are cheaper. So when Trump wins the election, Bitcoin surges, and I still had about 20% of my intended allocation still waiting to be deployed. That went in the money. Once the calls go in the money, it's a beautiful thing. You sell the calls, you buy cash. Sometimes you buy futures, depending on what you want to do. Sometimes I just want the pure exposure. I don't want cash Bitcoin. I just buy futures for cash management reasons, whatever. I'm usually involved in many different trading strategies. Most of them delta neutral, collecting yield. And sometimes I just don't have the margin to buy spot Bitcoin, so I'll just buy a future. So that's what happened here. 20% of my position just went in the money. The same thing happened here, by the way. The same thing happened. So here in early, here recently on this May breakout, notice that there is no VTL. The VTL is a slightly downward, has a slight downward slope. So I did the exact same thing. I said, okay, the VTL is going to line up with the 80-day cycle high, which it did. This is the 80-day cycle high, 106. This is a VTL when it broke out on May 18, 105. So it's basically the same level. So what am I going to do? What I did is I said, okay, technically the all-time high is 110, right? So May 18, on May 18, I buy some Bitcoin. I already had Bitcoin because I was buying after this low here. I deployed like 20% of my intended allocation. Here, what I did on May 18 is I bought the other 80% in 110 calls, simply because the VTL and the horizontal level were basically the same. So I couldn't really, the in the money calls or the at the money calls, they tend to be expensive. So you want to be a little bit out of the money. So I bought the 110s. I bought the 110s because, as you know, because we discussed it, we were holding one of these on May 23rd. That was the day of the top. And so I suspected that Bitcoin might correct. And I was right about that. I ended up buying most of my position between 105 and 106, to be honest. I never actually bought 100, which is what I wanted to do because I sold puts at 100 and they never went in the money. So I could never, when it went to 100, it was only twice for 3 days that it actually went back to 100K. And it was just very short lived. I couldn't actually deploy because I had sold puts as a means to buy more calls. So yeah, that happened. So that's what I do. That's kind of like automatic. This is my trading strategy. Yeah, breaks the VTL. I buy some calls. The calls go into money. I sell the calls. I buy spot, rinse and repeat. That's kind of what I do. I do the same thing on the downside. So I buy puts when it breaks the VTLs. And depending on the pattern, this is really up for my discretion. I just allow myself some leeway here. Typically, what I'll do if it breaks the VTL is I either buy puts or I buy a put spread.